And there it is. The markets are officially closed on this Wednesday, December 10th. Welcome, investors and traders. The Fed made the announcement. The basis point drop of 25 basis points caused the rally in the market. We'll have a lot to talk about there. But what is the big news once again is the silver market continuing to press the highs. Now, before we get into that, let me bring on Nod from our Nod Live feed. Nod, what else do you have to report on outside of the Fed news today?
Well, AJ, there's not really a lot outside the Fed because everyone was so hyper-focused on it. But I want to welcome everybody and thank them for joining us. We do appreciate you taking out your time. Everyone can take a deep breath and an exhale now. The markets did rally on the headline because the Fed snuck in. They're going to do some quantitative easing. That means they're back to buying positions in the market. So there's a little bit of a put in the market. So that's why we got a little bit of a spike. But if you can see, kind of gold and silver did kind of break ranks here. So AJ, I want to just really get right into it. Central banks probably in advance of this, they have been buying tons of gold in advance of this. In fact, in the month of October, they bought 3 tons extra of gold, 53 tons, which is 3 tons more than they usually get, AJ. So I'm getting tongue-tied because I'm excited. Central banks have now bought for 14 months in a row on top of that. And Goldman Sachs has upped their price target up to 4,900. So AJ, given what's happened and how excited I am about gold, what are you thinking about gold in advance and now in the rearview mirror with the Fed?
Well, GLD is still on my hit list for the upside here. If you take a look at this chart, this is the ETF for the Spider Gold shares. I still have an upside target on gold of 393. But if you look at the /GC, which is the futures, you've got a really nice cup and handle with more or less a double handle. Let me show you what I'm talking about here. Here would be considered the brim. Here's the cup. Here's the handle of the cup. So the brim, also known as the rim, is going to act as resistance. But if you look at what happened here today with the price action in the futures market, we got a higher low and a higher high. And so that combined with the pivots and hinges on the oscillators down below, I think I'm being a little conservative to the upside, because if you take the depth of this cup here, that's not a perfect textbook cup and handle, but close enough. And then you attach that to the breakout point, should we get one on higher volume, you're talking about gold going closer to 4,500, 4,600, which is going to continue to bring it into all-time highs. Now, Nod, and we have this very well documented through ZeroHedge and some of the other publishers that put us out, especially the Money Show.
Right.
And shout out to the Money Show folks there who are watching. But we've been documenting this all along the way. And if you follow me on my X page, you'll see that this week I raised my silver target from 95 up to, and that's SLV, my silver target from 95 up to 105. Now, understand something, that while we're seeing this vertical move in silver, this is going way beyond the technical signals. This is a supply issue. It's a supply crisis. You got the London Exchange, you got COMEX, they're freaking out. And if you're really thinking I'm too late to the party, I would say think again, because the crisis has not completely unfolded. And what you got to watch out for, whether you know how to read a delivery notice from COMEX or not, I would say go and pull up the Road to Ruta. Anthony, in the production room there, I don't know if you could pull that up. Road to Ruta is hosted by Bix Weir, and he does an excellent job translating and or interpreting what the delivery notices mean on COMEX. And when they start running out and reaching that crisis level where they don't have enough silver to deliver to those who are buying the futures contracts, you're going to see the back months drop in price while spot price goes up because of the demand. And that's called backwardation. That's the first big signal, like a tsunami coming in. You know how the waves go out first. That is going to be our signal to the tsunami in the silver markets. All eyes on COMEX, and I'll do my best to report on this week after week as we get closer and closer to that ultimate short squeeze. I think will even shock everyone.
AJ, I just want to put it into context. So when silver rallied from 40 to 50, that took 28 days. And when it rallied from 50 to 60, that took 12 days. And that's without any confirmed supply issues or short squeezes or whatnot. What I want to show here really quick on my screen is if silver was an S&P 500 company, it would be one of the top performers for 2025. You look at it, so it's up 110%. Again, your calls have been well documented. Your upside hits have been well documented. Did you want to kind of talk about more of what you've been doing on the personal side and any longer term targets that you have? Because I know a lot of people are interested now. We're going to see the retail people get in late. We're just going to look back over their shoulder and hear about everyone that has been trading silver in 2025. What can you add to that?
Right. Well, it's going to sound crazy, and I've never said this on a public broadcast, but I've told our member this quite a few times. Over the last 17 years, I've been accumulating paper silver, SLV, and physical silver and gold. So I deal with provident metals mainly, but with regard to trading, I've been parlaying it. So, for instance, if you see here on this chart, if I'm raising, if I'm accumulating silver in this area and I see a pivot point, I'll sell anywhere from 10 to 15% of my overall position and look for a drop lower. And then I take the money generated from that sale of a small percentage and I buy more back here. So in doing this, it's called parlaying the position. I, over 17 years, have accumulated more and more silver without having to contribute to the principal amount in the account. So I tell people my positions in silver, and I posted it on X. And if you go to hashtag AJ SLV trades, you'll see every single time I've added to my position, and even some of the times that I've sold. But the bottom line is, the number you mentioned there, over 100%, that's what my account looks like. And it's been a banner year. I can't say that I've had any other year in my 43-year career where I've had over 100% returns on my trading. But I wouldn't even call that trading. I just call that accumulating. Now, on the side note, for our members who are trading, we also trade the miners, and that's including AG. Now, I was talking about this one to our VIPs yesterday, where, again, you're asking me what I personally do. Yesterday, as I was watching the markets, I saw a higher low maintaining. So I got into AG on whatever available cash I had in other accounts. And I'm very happy I made that move, because if you look at AG, here's a cheaper way to get into silver for the folks that feel like they missed the boat. No, not at all. The miners are going to do just as well, especially in a short squeeze when the demand for this silver that they're trying to pull out of the ground goes higher than any other time in history. But look at this. This is a pretty deep cup and a handle that's forming here. Go out to Google Images and go look at what that could do for you as far as learning the pattern. And cup and handle patterns are usually continuation patterns. They're not basing patterns or bottoms. They're continuation patterns. So if I take the depth of this cup, which is going to be from here to here, you're talking about $5 to the downside here. Connect that to 16, you got $21 still left to go on the upside for AG. And you can look at Pan American. We've been looking at that one as well. In fact, it comes up almost every Wednesday.
Oh, yeah.
Our rapid fire. And look at that. I was talking about this last week as being like an off-kilter cup and handle. Here's the cup, here's the handle. It's not always perfectly horizontal, but you got the same effect, very similar to what you had back here. Here's your cup, here's your handle. And what happened, it broke out and hits targets like a champ. So notice how the swings in these stocks, the up and down swings, in other words, the volatility is starting to increase, not decrease, which means that the silver market, including the miners, are in a condition that's far from passive mode. It's excited. People are looking to buy the dips, and they're not so eager to sell into the rallies, but they're very, very motivated to buy the dips. And that's where we stand in silver. And if you had a chance to read my ZeroHedge article that went out on Monday, I talked about the Armageddon that's about to happen with the banks and the silver holders, because they're in a very, very tough spot. And so what I'm doing again is I'm raising my target on SLV from 95 up to 105, and that would be included in the silver market as well. I think we're going to see that. So,
well, AJ, I was going to bring up JP Morgan next, but I'm going to skip that for 1 second because on screen 13 out corner of my eye, I saw Oracle reported, and Oracle is doing an absolute nosedive. This is a name that you and I have covered in the past. We talked about that it was caught up early in kind of the dollar pass. I don't want to call it a Ponzi, but the AI pump up. If you can pull up your live charting and show the after hours, is there something that you see? Because you made a downside call on Oracle last week and the week before, and we're seeing it now in the after hours. Is there something new that you can show on Oracle?
Well, this one, I think they're selling it to buy it. It's the opposite of what we usually see with a pump and dump. This is a dump and buy kind of a thing. You see these candles here. I'll go minute by minute. You got craziness. These long, remember, each one of these candles is 1 minute. So I think it's just going to stay down in this area for a little while. It's probably going to oscillate here for the next half hour or so. And they'll try to keep it pretty much level at this level right around 210 to 211. That's my guess. I guess it's not even a forecast. It's just a guess at what they normally do. And then what I think you're going to see for Oracle is a buy on the opening. And so tomorrow's candle, I'll look at it like this. You're going to see something. I'll try to draw a green candle to make it look the way I think it's going to go. You're probably going to see a candle down here tomorrow where it gaps down to right around the 210 level. And then I think it's going to open it around 210 and trade up. I don't think it's going to get all the way to fill the gap there. But that, I think, is going to be an opportunity, especially for the option traders. If you see a candle like that, you don't have to jump in on the opening, mind you. But for the option traders, you wait for the selling pressure or you wait for some of the buy pivots to come in. And you could do really well with some calendar spreads on this one. It's got a lot of premium. And if you don't know how to trade calendar spreads or diagonal calendar spreads, and you're new to this channel, then come on over, spend 2 weeks with us for free, and I'll teach you how to do some of this. We did, Nod, you know this for a fact. We put out 2 trade publications today to roll positions.
Yes.
One was in ASTS, and then we took a new position. I can't give the exact details, but I'll show you. We took a new put position in CRWV. You members out there that are watching understand that you got to go check your member page to get the details in the video with that. But see, here's one where the market, the Dow is up 500 points on the close, and this one's down over 2% down. Now, there's a green candle there, but I think that this one's going to make a turn lower. So what we did is we went out to June of 2027 to buy some of the LEAP puts, and we're selling the front month puts against it to pay off the cost basis. Now, I know it's a mouthful and maybe confusing to some that don't know options, but understand this. It's like I'm buying an asset that is not completely owned by me, but let's say I bought a house and I'm mortgaging the house. Well, you have ownership and control of that property, but who really owns the house? The bank, until you pay off the mortgage, right? Well, that's what trading LEAPs is all about. When I buy a longer term asset, it's a temporary asset, but I'm getting leverage in the market because I'm not putting 100% down on the stock itself, whether it be long or short. And the selling of the puts is like you having a tenant in the house and you're renting the tenant, you're renting it out to the tenant, and the rent money goes towards paying off the mortgage. That's exactly what a calendar spread is in simplest terms. And it takes a little while to learn that, but holy mackerel, last week we took some massive profits out of Eli Lilly and RH and some of the other ones that we've been holding as cash cows. And it's been phenomenal, really has.
Well, AJ, let's talk about mortgages, because there's a misconception that the Fed controls lending rates on the house. And as our mortgage expert, Tim Lindsay, tells us, it's not. It's the U.S. 10-year. And I think even the most nominal and modest trader is paying attention to the 10-year because it impacts the debt, it impacts where their mortgage is, it impacts the dollar. Can you please have a look at the 10-year and let us know what you're seeing? And then maybe on the back of that, if we can look at some dollar-based positions, because I think that seems to be a crowded trade right now and people are looking for an opportunity.
Right. Well, let's start off looking at the 10-year yield here. This is the futures, the December futures for the 10-year. And at first glance, you're looking at this and you go, oh, man, look at that bearish engulfing candle. Oh, interest rates are going to drop. And it may do that. The 10-year may drop on the heels of the rate cut from the Fed today. However, when I take a step back, and you got to watch this, if I go 10 years looking at a weekly chart, this whole yield chart that you're seeing here is working its way into a symmetrical triangle. And the closer and closer you get to the apex of that triangle, the greater the chance of a breakout. Now, with that said, and let's go back to our economics class that we may have taken in college if you paid attention. Man, maybe some of us fell asleep, but let me tell you, that was very valuable information, because if you understand what's happening with interest rates, you should also know what happens generally with inflation. When interest rates drop, they pump more money into the system. People have access to this money, whether through loans or credit cards, whatever it may be. And then they go in and they start spending that money, because most people don't know how to hold on and save. They just know how to spend. It's our society. The Western world is buy now, pay later. I don't care, max my credit out. So what I'm getting at here is, if interest rates are coming down, I think inflation is going to come back, and that will require the Fed having to raise rates later on down the road to control inflation. I know Donald Trump was in Pennsylvania talking about the economy, inflation. I think that meeting, from what I understand, got out of control because it got into more outrage over the immigration situation. But I don't really believe everything that Donald Trump is saying with regard to inflation and the economy. If you go to AAA, AAA, Google this, AAA, and then you go gas prices, you'll see over the past year, even the regular price per gallon has only dropped by maybe 6-7 cents. Right. It's nothing to write home about. But remember what Trump was saying in the beginning: if we can get gas prices down, we're going to get overall inflation down. Well, we're not down in the fuel prices enough to make a dent in curbing off inflation. And so, again, you got to take everything with a grain of salt. You know, he's not the economist, but he's being fed information that I think is just outright false. Now, with all that said, there's going to be money to be made in this market, up, down, and sideways. I really don't care. As long as the premiums are high enough for me to sell in to pay off my positions, I'm in great shape. And right. That's what I have to say about the 10-year right there.
Well, I do want to loop back to financials. So yesterday we were on our VIP call, and going into the close, we did see a big red candle in JP Morgan. It looked a little bit squirrely going in. They tried to take it down to a big round figure. It held its own today and closed above. But is there something that you see with JP Morgan, again, maybe our silver conversation aside, and then maybe with regards to the XLF, what are you seeing now that we have the Fed in the rearview mirror for now?
Well, remember I guess you could say it's a pattern, even a cycle, if you will. Historically, what's happened in the years, year after year at the year-end rally, I think the timing of this rate cut is absolutely intentional, because they tried to get it as close as they could to the end of the year, because the Fed and everyone associated with the Fed knows that the year-end rally is a 7-day window where traders and investors come in and bid the market up. The last 5 trading days right. of the year, plus the first 2 trading days of the new year. Now, did a little research on this to make sure my numbers were correct. Out of the last 20 years, 15 out of those 20 resulted in higher prices after the Fed, but not right. by much, by a fraction of a percent. Now, you look at what happened here today, just in JP Morgan, that was up over 3%. So we're not talking about an extraordinary move to the upside, but it's something that we would measure and keep track of, because the money will still continue to come in on the buy side right up until the end of the year. But when you go back to JP Morgan and look at this chart, it's basically stuck in a sideways channel, right? From 295 up to 320. So you got $25 of price action here. And again, I don't care if it goes up or down or sideways. I can make money in any of those conditions, especially if you have a stock like this stuck in a sideways channel. So this would be, for the option trades out there, this would be a great trade for an eyeing condor, maybe selling some short-term put spreads, wait for a pullback and sell a short-term call spread, and then you collect money as long as it stays in the middle. You make on both of those. Yeah, there's a lot going on that JP Morgan chart that you could talk about. Especially
now the XLF is one of the more liquid ETFs, and it does represent the majority of the financials. Is that something that you would feel comfortable with an opportunity, or are there other places you would look if you wanted exposure to the financial side?
Well, we've been doing a lot of talk about the cup and handle pattern, right? If you look at this, this is the XLF. It's pressing the highs. This is the weekly now. But, and here's the big but with a capital B, you got the resistance high here, but look at the drop in volume. Just last month, we had pretty high volume, and then all of a sudden you got the volume bleed off here. So here, like JP Morgan, I think you're going to see XLF and some of the other financials that are going to be stuck in this range. Now, again, like I said before, and I'll continue to say it, if you're a swing trader, especially an option swing trader, this is heaven. This is trading heaven right here. Yeah. You can't get any better than that, because if it stays in the channel, you take long and short positions according to where you are in support resistance. And if you get a breakout, you close all positions and start a new position in the direction of the breakout. So it's not rocket science. You just got to know how to trade it. Yeah,
that's helpful. Hey, listen, so we've got to take a request from a regular in TAFE. And speaking in the financials, he says that Goldman Sachs has reached the top of both of his regular and log charts. Would you happen to agree?
Well, I would say it's definitely at a top. I mean, I could take a look at the monthly chart and look at that and go, holy mackerel, that looks like a silver market, right? And you go, this is driven, by pure greed right here. But notice the stretch. We've got, and we talk about this quite a bit, ABCD patterns, right? Here is an A down at the bottom, okay? It goes all the way up right through April and pivots lower where you put a B. And then it comes down, forms this hammer pattern, pivots up, and now you have a C. Now, what I find most interesting is that the segments from A to B are now equal to the segment from C to D. And that is an extremely, I guess you could say, stretched ABCD pattern. And this is the monthly chart. And we got holidays coming up. They're going to break up some of these trading weeks as we get closer to Christmas. But look at the drop in volume on the highs. Again, that volume is a tell. So while I would not be taking any new long positions, I would probably be scaling in to some diagonal calendar put spreads on the way down in an effort to capture some of that volatility when it finally breaks to the upside. And I mean the VIX. Because when the VIX starts going up, all that premium gets thrown into the market in the option pricing. And that means bigger returns for us because we collect that premium on the back.
That's great. You can tell we have a lot of our members here because they're metal heavy. So Dan is looking for CLF if you have a chance, and then Daryl's looking for AG. If you can just do a two-parter on that, please.
Yeah, CLF. We got Cleveland Cliffs here. This one again. See, the pattern is repeating. It's not a perfect cup and handle, but you've got a cup and a little bit of a handle. So here's another one where I think you got some potential for it to get up closer to 15 at that resistance up here. Right. So, I mean, if you had a choice to make, it's not a star favorite, as I would call it, but you definitely got a pivot here today, and the oscillators are starting to turn up. So I'd be more inclined to see this one go higher or possibly fill the gap that's up here. Now, Cleveland Cliffs has done a great job hitting targets, and it's hard to see, but if I point them out, you'll know what I'm talking about. You see these diagonal lines that I've drawn on the chart here, here, and even here? These are my price targets. So out of the last four, here's one back here. So out of the last 5 targets, 4 of those targets have hit, leaving one still open, which is down here. So that's an 80% hit rate. Now, when we look at that, I say, that's a good chance that this stock is going to follow the technical signals. So the way the technicals are signals are pointing now is that it's pointing slightly higher. But if I were in this one, and I'm not, but if I were in it, I'd be getting out right around the 14 level to take my profits on that gap fill. Now, AG, like I said, I got into this one yesterday. I'm going to keep this one. I'll probably think about selling it right around the $20 to $21 level on AG. And the reason I would consider selling that entire position is because I'm not married to the miners. More of a buy and hold and buy and trade on SLV, PSLV, and physical, except the physical, I just buy and hold it. I don't ever sell it. And so the miners, for me, are the better trading instruments to get into because they have such a great variety of option strike prices and a pretty efficient market to boot. Yeah, so
we've got a bunch of new folks. So Eric G, he says that PG looks good. Now he's hedged himself because I don't know if he means the good to the upside or good to the downside. But what do you think, AJ?
Well, again, here's one I wouldn't touch because the trap that a lot of people fall in is they look at the 52-week high, 52-week low, and they go, "Holy mackerel! Look at this stock on a 52-week low. I think it's going to get up to the 52-week high, so I have to buy it." Right. And then what happens is they buy it, it gets up to the moving average and then takes another downturn because the whole thing is in a massive downward channel. Right. This is a sideways channel like we looked at in Goldman Sachs and JP Morgan and XLF. This is a downward channel. So Procter & Gamble is in trouble. And I just wouldn't be touching that. I'd be waiting for a rally and selling into the rally. Look at this thing. This is a 3-year chart, folks. We're approaching the 3-year low. Hey, who wants to take a shot and buy the low? Not me. I'm not doing that one. You're much better off trying to buy a high. Oh, isn't this interesting? Look at that head and shoulder pattern that's right at the top up there. Remember how to measure that move? You take from the neckline. I'm just drawing it here. You take from the head to the neckline, attach that to the breakout point, and then you got your targets down there. So it did a great job with that head and shoulder top. For those who were shorting it, did really well on that one. But I wouldn't be touching that one. I mean, you got a chance of a bounce maybe up to the moving average, but I think it's too risky at this point. Yeah.
Just a reminder for those tuning in, for every Wednesday at 6 p.m. Eastern, AJ fields and forecasts 50 plus of our member submitted tickers live. So if you're interested in this and you're not a member, do grab a free trial. AJ, we have a couple minutes left. If we can grab another one, please. This is from EZ. Can you look at AppLove and APP? That's one that we talk about a lot. This has been pretty volatile, and I think it's kind of immune to the Fed. But what are you seeing now?
Yeah, this is another one that does pretty good job hitting targets. I still have a downside target on this one at 598. Now, here's another one that's showing weakness on a big up day in the markets. And what do I talk about there? That is known as a bearish harami. It's when you have a small little body red candle that falls within the previous green. And that's all happening at a resistance point from back here. So I would still keep my downside target on that. And on a day like today, I would even consider taking a position on some type of a put spread. That's how I don't have a position in this, but if I did, that's exactly what I do. I'd probably even consider selling some March in the money calls. I'm going to do a lot of this on the rapid fire tonight. But if you sell a 670, 680 vertical call spread, look at that. You could sell that for almost $6. I think that's your best place between 6 and 6.5. I think you can make money on the way down, and it would not cost you a whole lot in margin requirement to do that. It's only going to cost you maybe $400, close to $400 to put that spread on. And you could do very well percentage-wise. We like trading the vertical spreads. Our VIPs have had a good dose of that over time. But what we've shifted to now lately with the VIPs that come up every Tuesday, we've been shifting to short-term calendar spreads and moving away from the verticals because we're getting a much bigger return on the short-term diagonals. In fact, yesterday we took a 61 or 62% profit on a trade that we only had for a week.
Right.
And that's the kind of return, not a performance guarantee of any sort, but that's what we're doing. Again, I can only tell you from our experience. Now, Nod, we're down to the bottom of the hour, and we never run out of content.
Never.
We just run out of time. So I want to thank everyone for joining us here on this YouTube channel. If you could take that link and share it. Once we get it on the recording, once you share that with anyone that you might feel is interested in the markets, you're going to be helping them out quite a bit. So we're off to the next rapid fire stock analysis session from 6 to 7. For those members who are going to be tuning in, we'll see you there. And that's a wrap for today. Thank you, Nod. Thank you, everyone.
Thank you.